We've got a fascinating story to kick off our show, focusing on three growth stocks that have been making waves in the market lately. First up, we have SoFi Technologies, a fintech specialist that's been performing well despite some near-term headwinds. With a record 14.7 million members and a growing product portfolio, SoFi is attractive to younger people and has solid reasons to be bullish about its long-term outlook. Next, we're looking at Robinhood Markets, which had a disappointing first quarter largely due to its cryptocurrency business. However, the company is slowly decreasing its exposure to this volatile market and pushing other initiatives to reduce its reliance on crypto. With its prediction market ventures and range of services for investors, active traders, and people saving for retirement, Robinhood has become a fully fledged financial institution with potential for outstanding long-term returns. Lastly, we have TransMedics Group, which is transforming the organ transplant market with its portable organ care system device. Although the company's latest financial results haven't met Wall Street's standards, its expenses are rising for good reasons, such as expanding abroad and investing in research and development to get the OCS approved for other organs. It's essential to consider the risks and potential rewards of each stock before making any investment decisions. We'll be keeping a close eye on these companies and providing updates as more information becomes available. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and economics, where the Federal Reserve's interest rate decisions are making headlines. The outlook for interest rates has shifted from expectations of equity-friendly rate cuts at the start of the year to projections of hikes in the coming months. This change in stance is largely due to the new Fed chairman, Kevin Warsh, emphasizing the central bank's focus on delivering price stability with inflation above the 2% annual target. As we explore this development, it's essential to consider the potential impact on the market. Higher interest rates can pressure equities by raising borrowing costs for consumers and companies, making bonds potentially more attractive than stocks. The recent jobs report showed a slowdown in job growth, which has calmed some market fears about a near-term rate hike. However, the Fed fund futures suggest roughly even odds that the central bank will raise rates by its September meeting. We're also keeping an eye on the upcoming earnings season, which is expected to be pivotal. The S&P 500 companies are projected to increase second quarter earnings by more than 24%, according to LSEG, IBES. Early reports from Delta and PepsiCo will provide valuable insights into consumer spending trends. As Keith Lerner, Chief Investment Officer at Truist Advisory Services, noted, the main thing for the earnings season is to validate the earnings trajectory for this year and ensure upward momentum continues into next year. As we navigate these complex economic developments, it's crucial to stay informed and adapt to changing market conditions. The interplay between interest rates, inflation, and corporate earnings will continue to shape the financial landscape. We'll be keeping a close eye on these factors and providing you with timely analysis and expert insights. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some of the global market trends that are making headlines. In Europe, the STOXX 600 index has hit an intraday record high, logging its biggest weekly jump in over a month. This rally is being driven by gains in cyclical stocks, as well as investors pushing back on expectations for an imminent U.S. rate hike. Meanwhile, Germany's DAX index has also notched an all-time high, with industrial groups like Siemens seeing significant gains. The tech sector is also performing well, with chip firms like Aixtron and Soitec rising sharply. This broadening of the rally is a positive sign for investors, as it suggests that the market is becoming less reliant on individual sectors or stocks. In other news, the Indian rupee has strengthened against the US dollar following a boost in investor sentiment. The currency gained ground after the Indian government announced plans to increase foreign investment in certain sectors. This move is seen as a positive step towards liberalizing the economy and attracting more foreign capital. However, it's not all smooth sailing. Defense stocks are on the rise, driven by ongoing geopolitical tensions between Russia and Ukraine. While this may be a boon for investors in the short term, it's a reminder that global instability can have far-reaching consequences for markets and economies. As we close out today's show, it's clear that there are many factors at play in the global markets. From rate hikes to geopolitical tensions, investors need to stay informed and adapt to changing circumstances. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.